Where we're following breaking news this morning, the killing of top Iranian commander Qasem Soleimani by U.S. airstrike at the Baghdad International Airport in Iraq. When this news broke last night, we saw the futures drop. That's continuing this morning, although the futures are quite a bit off their lows. We also saw a big move in crude oil. Joining us now to talk about the market impact from this event, Mohamed El-Erian, Chief Economic Advisor at Allianz. He's on the Squawk Newsline. CNBC Senior Markets Commentator Mike Santoli is also with us. How many sessions will we be talking about this, Mohamed? And nobody knows. I understand that because it depends on what happens from here on out between the two countries. But what do you think?
I suspect, Joe, that the market consensus is going to be to fade this pretty quickly. It has seen this movie before, and this movie before is a spark in geopolitical tension, textbook reactions that you just talked about, stocks, bonds, and oil, and then the markets fade that. However, the issue, Joe, is not the immediate. The issue is how this plays into a much bigger theme that you and I have been discussing, which is constructive short-term momentum versus major medium-term uncertainties.
Mike?
Yeah, I definitely agree with that. I mean, the market, the moves are relatively muted, and I think it's important to consider what the setup was in markets heading into this, where you just had this momentum move in equities higher. I do think the market has kind of added back a little bit of risk premium in the bond market and in crude oil, but really very muted moves.
Does this end the momentum, or is this just a kind of a bump?
I think it's a shakeout, and I think we were set up for something like this because people, if you think about the general view coming into this year, it was that we cleared away a bunch of uncertainties that had nagged at us, and it seemed as if people had a hard time coming up with the thing that was going to disturb the upside.
Right.
And usually something comes along, and this might not be an enduring story at all, but it is something that at least causes people to step back a little bit. I'm interested in seeing the bond market response because Treasury yields are not down that much. They're still kind of holding above their recent lows. And that has been an interesting spot right there because a lot of people were looking at bonds as at a bit of a decision point, kind of up near their multi-month highs in yield. And this is probably going to keep them from going up through there anytime soon.
It's complicated, Mohamed, obviously. It's in Iraq. It's about it's an Iranian general, and I'm just wondering what do you think the dynamics of the next 6 months are in that region?
Look, there's three narratives out there as to the justification or what this action means. One is it's about time to draw the line. Let's not forget Iran shot down a plane. Let's not forget Iran attacked a ship, and Iran attacked oil facilities. The second interpretation is completely opposite, that this is a hostile and unprovoked move. And then there's something in the middle between these two interpretations. So depending on what you look at, you can have different scenarios. I think the key issue is what Mike said, is don't forget market conditioning. And the market has been conditioned to expect two things. One is that you don't get subsequent escalation. Why? It's in neither party's interest to do so. And two is that you have central banks standing on the sideline waiting to repress volatility. That is why the market moves are so muted this morning.
So what's more important for Iran at this point? To demonstrate that they will follow through on the revenge that they're talking about for this, or do they have enough problems economically and everything else in that country right now where they don't want to necessarily have a much bigger conflict with a superpower? What do you think, Mohamed?
So they certainly have enough economic problems, and the sanctions have been biting. But what we don't know, Joe, is whether that leads them to be, quote, more desperate in order to do something, and therefore do something big in order to lift the sanctions ultimately, or alternatively, it stops them from doing something more. We just don't know, Joe. But the market is going to behave unless it sees a further escalation. It's going to fade this action. Joe, I go back to the key issue has always been how to navigate this tug of war. And you've heard me say it's about going up in quality, stressing balance sheet and cash generation. Do not fade the U.S. markets, even though they have outperformed massively. And don't over-rely on liquidity in inherently liquid asset classes. If you have these three principles, you'll be able to navigate what's ahead.
So from the prism of investors, you don't think this becomes you don't think that this becomes anything that should change your strategy different from where it was at the beginning of the year then? But
well, it depends what your strategy is. My strategy has been keep a claim on the upside, but increase downside protection. That, I think, is the right strategy.
Can I ask you one more thing about just remember the Arab Spring, Mohammed, and we talked about it again and again and again in all the different countries where we saw it, and there was some hope that someday Iran would not be a theocracy. Is it 20 years from now, will it be the status quo? Because people are saying this is not going to be the start of any type of regime change. Do you agree with that, or could the fuse be lit right now?
Look, Joe, there's a very simple principle that also speaks to what happened in the Arab Spring, is you cannot replace something with nothing. So if you're going to bring down an existing regime, you better have clarity as to what's going to come after it. If you don't, then you end up in a situation like Iraq. So you have to be clear as to what comes next. These are big strategic calls. And without that answer, then you don't get clarity and you don't get stability.